This entire week, and especially coming after data that came in from intraday trading yesterday, the Indian rupee on Tuesday slid to a fresh record low, breaching the 91 per dollar mark for the very first time during intraday trade before recovering slightly and closing the day at 90 rupees 93 paisa against the US dollar. Now, no concrete update on the India-US trade deal, coupled with foreign investors cashing out of both Indian equities and bond markets, continue to put pressure on the Indian currency. Now, this year alone, the Indian rupee has dipped 6% against the US dollar. Now, this time, the only culprit is not the strong US dollar. In fact, the US dollar index has been hovering in the below 100 range at 98 to 99 levels. The rupee has been hit worse against other currencies, including the euro and pound. Now remember, the rupee has slipped 21% against the euro. It has slipped almost 14% against the pound. A similar weakness has also been seen for the Indian rupee against the Australian dollar, and the rupee has slipped almost 8% or so against the yen. The fall against dirham continues to be in line with the slip against the US dollar at about 6.2%. Now, among its Asian peers too, the Indian rupee is the most depreciated currency this calendar year. Now, despite big FDI commitments by big tech, including the cumulative $67.5 billion worth investments committed by Amazon, Microsoft and Google in the last 3 months, global capital has swung towards other perceived AI winners. This includes markets in the United States, South Korea, as well as Taiwan. Emerging markets and Asia-focused funds have been losers with massive fund outflows. Moreover, the Reserve Bank of India's open market operations on stabilizing the rupee have been limited, where the central bank says it does not want to peg the rupee to a certain value against the US dollar, but only manage volatility. Now, while the fall in the rupee value against the US dollar is bad news for Indians traveling abroad, the impact on the economy poses mixed signals. The biggest hit is likely to be for India's import of oil, followed by the massive import deficit owing to gold imports that in any case are at record high valuations, both in terms of price as well as volume of imports. But on the export front, the story is brighter. India's MSMEs and export-oriented manufacturing sector is likely to gain with the fall in the value of the Indian rupee, as dollar-denominated value of exports will bring in more rupee-equivalent cash for exporters. Meanwhile, India's trade numbers delivered a positive surprise in the month of November. Exports jumped to their strongest November level in over a decade, while imports cooled sharply after the spike the numbers saw in the month of October. The result was the biggest month-on-month correction in India's trade deficit this year. November's data offers the much-needed relief amid global tariff pressures and slowing growth risks. India's trade deficit has declined to a 5-month low of just $24.53 billion in the month of November, driven by a fall in gold, oil and coal imports, while exports to the US have picked up, government trade data showed. Now, economists had expected that the November trade deficit would be in the range of about $32 billion, according to a Reuters poll, compared to a record deficit of $41.68 billion in the month of October. Merchandise export to the United States has in fact risen nearly 10% month-on-month to a volume of $6.92 billion in the month of November. Now, this came after exports to the US fell nearly 9% year-on-year to $6.31 billion in October, though they were higher than the $5.47 billion in the month of September. India's overall merchandise exports rose to $38.13 billion in November from $34.38 billion in October, while imports fell to $62.66 billion from the $76 billion in October. Merchandise exports to the United States, which is India's largest export market, rose over 21% on a year-on-year basis in November compared to $5.71 billion in November 2024. Prime Minister Narendra Modi's government has rolled out measures including consumer tax cuts, an export promotion package and labor reforms to cushion the economy from the impact of steep US tariffs. Remember, Modi also spoke with US President Donald Trump last week. While New Delhi seeks relief on key export lines, Washington is pushing India to lower tariffs and non-tariff barriers on U.S. goods and open its market to American farm products, including soybean and grain sorghum.